We would like to acknowledge the traditional territories of the people of the Treaty 7 region in southern Alberta, which includes the Blackfoot Confederacy, comprising the Siksika, Piikani, and Kainai First Nations, as well as the Tsuut'ina First Nation and the Stoney Nakoda, including the Chiniki, Bearspaw, and Wesley First Nations. The City of Calgary is also home to Métis Nation of Alberta, Region 3.
All right, good morning. My name is Dan Wilson, and I have the pleasure to serve as the Director of Financial Markets Regulation at the School of Public Policy, University of Calgary. One of our key initiatives is a partnership called the Alberta Financial Sector Research Partnership, in which we partner with Alberta Treasury Board and Finance. And I will invite Dr. Jack Mintz, the chair of that program, to provide an introduction on that.
Thank you very much, Dan, and thanks to all of you who are participating in today's webinar on whether Alberta, as a sub-national province or sub-national entity, should be looking at an open banking regime, which is based on an excellent paper provided by Ryan Clements, which will be introduced in a moment. The Alberta Finance and School of Public Policy Partnership has been a very unique opportunity to look at how financial intermediation can help spur Alberta's growth, as well as provide opportunities for diversification of Alberta's business activities. Finance is a very important activity in an economy, and it certainly helps facilitate both lenders and borrowers to match in markets and provide the lowest cost financial intermediation, as well as following other objectives such as financial stability and investor protection. The papers that are being done for the series, and Ryan's the one that he'll be presenting today, was the third of the papers that we have issued so far. All deal with very important policy issues that have been worked upon with Alberta Finance, and in fact have been very important in the policy process, giving authors a very unique opportunity to actually have their voices heard on important policy issues. And so this particular paper on open banking addresses a very important topic that many people have discussed in Alberta, and we are lucky to have one of the top people in North America actually to help analyze what open banking could mean to Alberta. So Dan, I'll turn it back to you, and you can introduce Ryan.
Thanks, Jack. So our speaker today is Dr. Ryan Clements from the University of Calgary Faculty of Law. Ryan is, as Jack mentioned, highly in demand these days. His work focuses on new economy and the intersection of technology and finance. He speaks very frequently on blockchain and crypto. You've likely seen him on the news and many other outlets. Ryan also serves on the Canadian Securities Administrators Investor Advisory Panel, as well as the Alberta Securities Commission's New Energy Panel. So with that, I will invite Ryan. I will just say before he starts, Ryan's presentation will run something around 40 minutes. After that, we will have a Q&A. If you'd like to participate in the Q&A or have a question, just fire it off in the Q&A section that you see at the bottom of your screen. Ryan, over to you.
Thank you, Dan. I'm just going to share my screen. I appreciate that introduction. One just slight correction. It's the New Economy Advisory Committee that I serve on with the, let me start that screen, at the Alberta Securities Commission. So my scholarship focuses on the intersection of law and new financial technology. So I write across the scope of fintech topics. And when I was given this research undertaking, it's kind of exciting to me because it was a novel investigation generally speaking, when we're talking about open banking, there seems to be an assumption that this is a federal initiative. And I wanted to contest that assumption and investigate whether, and if so, how a subnational approach to open banking might be feasible and what it means. And I also want to kind of contest the idea of limitations to open banking. So maybe conceptualizing larger open data ecosystems and data-based economies. Because I'm a law professor, looking at kind of the regulatory frictions that may be in the way of maximizing consumer utility and economic benefit from these types of regimes, and what type of accommodative policies might be necessary in order to maximize consumer welfare in this area. So I have a roadmap, which I would like to present. I want to spend, again, as Dan mentioned, this investigation is based on a novel paper that I published with the School of Public Policy called Could Alberta Enact a Subnational Open Banking Regime? Link to the paper was included in the invitation. Feel free to reach out to me. My contact information is on my faculty profile at the University of Calgary Faculty of Law, if you would like a copy of the paper as well. The paper charts a pragmatic course for how the province can immediately participate in the benefits of open banking, but not just open banking, a larger paradigm, open finance, and even consumer data portability without requiring a complex subnational regulatory and governance structure like what's being contemplated and navigated by the federal approach, or without expending scarce provincial policy resources. To get to that point, I want to kind of move slowly and accessibly within the confines of the 40 minutes that I have through these 4 goals. First, I want to introduce definitionally what open banking is. I suspect that several of you will be quite familiar with the concept, but I also suspect that some of you aren't. But perhaps you've heard it in the news in respect to the federal government's various initiatives that have been ongoing for 4 years now. And the appointment of a committee with respect to the implementation that's happening right now on it, and some of the frictions perhaps that you've heard, which I'm going to get into. So I want to define it. I want to address why it might be relevant to Alberta. In defining open banking, I also want to identify why we should even care from a policy perspective. So I'm going to discuss some of the conceptual economic benefits of open banking, but I'm also going to address some empirical evidence as well, including studies and data that have been compiled from various international regimes that have implemented open banking structures. I'm going to introduce the differences between types of open banking in the empirical evidence as to its value, and then utilize these different frameworks in assessing them for a subnational regime. After I've identified some of the benefits in the international implementations, I want to zero in briefly on the Canadian federal approach. And I want to identify some of the implementation challenges and drawbacks that the federal government is facing on implementing an open banking regime. If you've been following it, you know that there's been a series of consultations, a final advisory report, a Senate committee report, and then now a committee which has been constituted to implement open banking, but it's still not in place right now. And I'm going to identify and isolate what I believe are some of the frictions to the federal approach. Given the delay in the federal approach, the essence of the paper is whether or not the province of Alberta is just bound by the delays, and that consumers, banking consumers and finance consumers in Alberta just have to wait until the federal approach crystallizes, or whether or not there's a mechanism, and if so, what type, that subnationally Alberta could pursue. So I'm going to introduce, which are developed in much more detail in the paper, several potential subnational approaches that Alberta could consider. And the prescriptive recommendation that I give is what I've defined as a market facilitative approach that effectively takes hybrid elements of various international conceptions within the constitutional confines of the province's authority in this area. And I will identify what this looks like and how it can be implemented and what the province should be looking at going forward to maximize the benefits of an open data economy while ensuring the consumer safety, financial system stability, macro and microprudential safeguards are ensured. So first, what is it? What is open banking? Well, there's no universal definition. There's a variety of international models of adoption and academic scholarship and policy reports that effectively combine various features to construct a framework allowing banking customers to control their financial data and share it with third-party service providers. Sometimes surprising to my people, to my students, because I teach a fintech class which has a unit on open banking, is the realization that the data that is housed at the bank, including credit data, transactional data, wealth data, is not actually controlled by the consumer. It's controlled by the financial institution. Open banking creates a mechanism where consumers can control their financial data and share it or port it with third-party service providers, such as financial technology firms, using standardized and interoperable technological processes combined with consumer liability safeguards, such as legal accountability and responsibility for the third parties that receive and utilize the data. So the starting point for any open banking discussion is, how is the data unlocked? What is the access point? This can be provided by providing consumers a proprietary right over their data, which generally requires some type of legislative mechanism to do, or by creating a legal obligation for financial institutions to provide such data upon consumer requests. So the prudential regulatory bodies of financial institutions, or in the case of investment dealers, the Securities Commission, could direct a positive obligation for these financial institutions to unlock their data and allow for a sharing or portability upon consumer request. And there's different models internationally, and I will describe what different countries are doing and how they're applying it, and then apply that subnationally into Alberta. The access and sharing of consumer financial data is facilitated in a safe way through a secure data transfer technology software called an application programming interface, or an API, which can be designed with a consumer-focused consent-based framework. Data sharing does exist. Some of you might be thinking that, well, can't I go into my bank and I can provide an access point to right now? The answer to that is yes, but it's done through a technology called screen scraping, which exposes both financial institutions and consumers to a variety of risks. So open banking presents an alternative regime with legal safeguards, consumer safeguards, liability assessment mechanisms, and more secure financial technology processes to be able to port and potentially even move data between financial institutions. One of the conceptually important places to start is to compare what currently exists in terms of unlocking data from financial institutions to what could exist under an open banking regime. So screen scraping does exist in Canada. This is from the Senate report on open banking, which was published in 2020. They estimated at that time that 4 million Canadians currently use screen scraping services. How screen scraping works is that the consumer provides their online banking login credentials to some type of a money management application. The money management application accesses the accounts for which it has the credentials. It collects the consumer's financial data and then stores the credentials and the financial data. In addition to opening up pathways of cyber risk, in many cases, screen scraping violates the terms of online banking agreements and online access agreements. With an open banking regime, login credentials may remain confidential. The consumer will consent to a specific financial information that is accessed by money management application. The information is accessed through a financial institution's API, and the API allows money management applications to access data securely and without the need for login credentials. I'm going to break down kind of the subcomponents of this shortly, but the starting point is basically safe data access and portability versus data access and portability, which creates consumer vulnerabilities and violates terms of many online banking agreements. Well, what's the value in this? Because it's easy to look at this and say, okay, fine, we're getting data. There's an unsafe way to do it, and there's a safe way to do it. Why should I care? And why should policymakers in Alberta care? Well, let's now move into that. In order to understand the potential consumer utility and various economic benefits, and then the empirical evidence that has been shown from regimes that have put it into place, we have to isolate what exactly it is that we are talking about. So there's effectively 3 tiers. This was from a report on open banking by the Credit Union Association, Canadian Credit Union Association, which summarized the various tiers. So there's read access is the most basic form. It permits consumers to instruct a financial institution to share their data with a third-party service provider or vice versa. The party to whom the data was shared, however, can't manipulate it. They can't make changes. They can't update it. They can only view it. So, for example, a consumer could instruct their primary financial institution to share transaction balance data with a budgeting application, for example. Well, that's not the only form of open banking. There's also write access. So write access is the next step in an open banking regime, which allows verified third-party service providers to actually alter consumer financial data in addition to reading it. For example, it allows a consumer to instruct a third-party provider to initiate a payment or transfer funds on their behalf. For example, small businesses in regions with write access will often use third-party service providers to automatically pay invoices on their behalf. So, and I'm going to provide a variety of other conceptual examples as well, and real examples that have been implemented, particularly in Australia. Finally, the most broad-based open banking tier is move access. Move access permits consumers to instruct third-party service providers to open accounts or switch accounts on their behalf. Empirical studies throughout the world have shown that switching costs in banking is something that negatively impacts competition amongst financial services, and we know this to be the case, right? Like I like to survey my own students, and I say, how many of you are still banking with the bank that you set up when you were 14 years old with your parents? And it's amazing how consistent that kind of heuristic is, that test of who you bank with. And even when you feel like maybe I'm not getting the best service, I'm paying a fairly high fee, switching costs are significant, a significant deterrent to changing banks. Move access allows a consumer to instruct a third-party provider to open an entire new account and to move funds potentially in an automated way. Now, the current scope of the federal framework is only read access. It's only the top tier. There's been indications they will look at write access in the future as an expansion point once read access is fully implemented. Okay, so what can we do with this? What are some conceptual benefits that have been suggested in the literature and suggested in the policy documentation around international regimes that have implemented these type of mechanisms? Automated money management is one. Credit proxies. So utilizing transaction data for thin credit files as a proxy for creditworthiness. Aggregating accounts together across multiple financial institutions for a potential lender in a credit origination context to assess creditworthiness and to effectively price risk. Account switching in a very easy way. Now, as I mentioned, you need write access for that. Aggregation services is one that's particularly interesting from consumer perspective. All of us can think immediately to well, all of us, I suspect most of us can think immediately to the phones in our possession and think I have an account for multiple accounts potentially for different banks or financial institutions. I might have a discount brokerage account. I might have a crypto account. I might have a separate insurance, and the ability to aggregate under one app. And not just to see that. So read access allows for the aggregation to see the cross section. When we move down the tiers into move or write access is not just seeing the complete picture, it's actually moving interbank within the same application. That seems to have a significant amount of interest to consumers to be able to do that. The ability of firms to offer tailored financial services is enhanced under open banking framework, at least conceptually. Improved educational offerings, the regulators, so the prudential regulators for financial institutions, the market conduct regulators and securities, investment dealers, for example, can gain insights through access to data potentially as well. It facilitates greater payments initiation. Sweeper services is something that's often talked about. So the ability, for example, to automatically move money. If we have an aggregation system and we have move access, we can move money from different institutions to cover things like idle cash deployment, avoiding overdraft fees, moving for higher interest opportunities. That needs right access. Banks can leverage their brands through cross-selling. It's not just banks unlocking the data that they house as a gatekeeper, but actually utilizing the abilities to access data across other financial institutions. And there's small and medium enterprises can look to automated services and streamline management, such as invoices, payroll, to lower costs of business operation. Well, that sounds good conceptually. Is there any evidence that any of this stuff works? The answer to that question is yes, we're starting to see it. Now, this is very new. The implementations of open banking regimes are very nascent. And you can see this was an image that was produced in the Canadian Credit Union Association's report on open banking. You can see across the world, I want to zero in on a couple, which I'm going to describe in more detail shortly. UK regime created an open banking implementation entity in 2018 as a top-down prescriptive approach, directing financial institutions to unlock their data. I want to contrast that with Australia, which came about it via a mechanism known as a consumer data right. So endowing consumers themselves with proprietary rights over their data rather than a prescriptive top-down direction from financial institutions. America doesn't have a regulated system. They have pursued it under what's known as a market approach, which I'll describe shortly. And those are going to be kind of the main ones. And we also introduced a little bit of Japan and Singapore as well. But you can see throughout the world, you have some interest in it, including Canada. You only have a few areas that are a few countries where we've actually implemented regulatory frameworks around open banking. Okay, so what's the evidence that we have? Well, there is evidence in Australia that there's been new financial products and services. The Australian government, in a 2022 strategic assessment report of the consumer data right-based open banking regime, has identified that there has been diverse new financial products and services for consumers. There's been budgeting applications, bill payment and financial management applications, streamlined credit approval processes, more in-depth financial overviews to assist consumers in home buying journey, and the use of financial data combined with COVID location data to alert a consumer if they've been to a COVID hotspot. So that's the market implementation. Once the permissive regime was established in Australia, this is how the market has responded. And you can look up this 2022 strategic assessment report to have more detail on that. There have been empirical studies showing that switching costs clearly impede competition in financial services, and that open banking is lowering switching costs. There's evidence of better loan processing and credit origination and credit assessment accuracy. There's evidence of benefits to existing financial institutions. There's evidence of fraud mitigation, payment security, and instant transfers. And interestingly, and this is particularly important as we think about the financial sector partnership in Alberta, looking to the future, looking to concepts like facilitating technology ecosystems and capital formation and foreign investment, there is empirical evidence. Actually, a study conducted by researchers from the University of British Columbia, along with researchers from Stanford and the Columbia University in New York City, found that fintech venture capital investment increased by 50% after a country adopted an open banking regulatory framework. I cite the paper if you want to see it in my paper. The authors, using a novel data set called an OB Strength Index, measured how the open banking policies impacted venture capital deals between 2010 and to 2021, and found that in addition to a 50% increase in venture investing in adopting countries, those countries with more comprehensive policies had even larger venture capital impacts. So in addition to the capital formation, we know that venture investing leads to innovation, leads to job formation. There's residual impacts across educational ecosystems and across the broader economy. So venture investing is a good thing, something we want to support. There's also what I've described in the paper as derived benefits from a strengthened technology ecosystem. Open banking regimes have this derivative effect on other elements of technology ecosystems, which can have a variety of payouts, including enhance entrepreneurial efforts, enterprise and innovation, including those within existing financial institutions, improve regulatory expertise and government efficiency, improve research and development and university funding and grants, job and internship formation, capital formation in not just open banking or open data regimes, but in a variety of digital infrastructures, and complementary innovations, including things like blockchain, machine learning, and AI. When it comes to blockchain, for example, potentially evolving from, there's a fair amount of emerging literature in this area that emerging from or collateral to an open banking or open finance regime, and I'm going to identify the difference between those two shortly, could be the establishment of a self-sovereign digital identity. This could enhance privacy and content protections for open banking. It could also be used for a variety of elements to improve tax collection, travel verification, vaccine verification, the delivery of other government services such as passports, utilizing a private permission blockchain infrastructure. A self-sovereign digital identity mechanism could also help smaller financial institutions such as credit unions to comply with their client rules, anti-money laundering requirements, etc. So there's some regulatory cost reduction or regulatory burden reduction benefits to having these type of efficient technologies deployed. Okay. We currently don't have one right now. There's some discussion of investigating this that has taken place across other provinces as well, including Ontario. I'll point out too that open banking does align with regulatory goals. Depending on the nature of the regulatory agency, whether it's prudential regulators or securities regulators, insurance regulators, there's a variety of underlying regulatory and policy goals in establishing regulatory bodies and the implementation of laws for financial institutions, period, including economic efficiency, supporting innovation and competition, capital formation, consumer investor protection, financial system stability, which can involve both micro and macro prudential, so systemic risk mitigants for macro prudential, or ensuring safety and soundness of key financial institutions as micro prudential measures and fairness and conduct. I'll point out too, just briefly, on how open banking aligns with some of these goals. In terms of consumer protection, open banking fosters safe sharing of consumer data under standardized parameters with access controls, liability assignments, and consumer redress. And those mechanisms are not available in the current practice of screen scraping. With respect to financial system stability or macroprudential goals, you have a more complete consumer financial profile. Banks can give more accurate credit risk assessments. It also potentially increases financial instability by lowering concentration risk in the financial sector. So reducing the footprint of too big to fail banks, which also has the other residual effect of increased competition, which can lower costs and provide better products and services. So the lowering the concentration risk while increasing competition and consumer choice. And so with more banks and financial service providers, total economic fallout consequences of a single firm's failure are significantly decreased. Okay, so let's pivot now into the federal approach. If you've been following it at all, you know that there's been a series of stakeholder investigations by the federal government and public investigations into the feasibility and the implementation framework for open banking of Canada. It started in the 2018 budget in terms of a forthcoming review. Consultations began in early 2019. The advisory committee of the Department of Finance received over 100 written submissions. They engaged in numerous domestic and international stakeholder roundtable discussions. There was a 2020 follow-up report. They advocated for the term open banking to be replaced with consumer-directed finance. They identified alignment among stakeholders, so not just the banks, but fintech firms, consumers, government, that the government had a role to play in an ecosystem of safe sharing data. There was also a 2020 Senate report as well, collaterally, that came in. The 2022 follow-up report identified a variety of benefits for consumers, but also a number of key risks that had to be mitigated, primarily around consumer protection, privacy, cybersecurity, and data access parameters. The advisory committee's final report came out in April 2021. It had 3 foundational elements, 6 key consumer outcomes. It sought to eliminate screen scraping altogether in Canada, and it proposed a purpose-built governance entity. The 3 foundational elements included rules to ensure consumer data was protected and to ensure a liability assignment framework, to establish a read access, not a write access, via accredited participants who could access, so that implies an accreditation process, could access currently housed financial data, and the need to establish technical details on processing and safe data transfers. It was really important in this focus on consumer-directed finance that consumers are protected, they're in control, they have access to useful products through this regime. We don't want to establish this regime if it's not going to have consumer utility. We have consistent, reliable services, recourse when something goes wrong, and ensure that there are effective consumer standards. Where are we from that? The final report contemplated an implementation by early 2023. We are almost spring in 2023 and we don't have that. Why hasn't that happened? For those of us who are following the sector know that there's a lot of complexities. There's a lot of complexities in establishing what a top-down, centrally controlled structure. In addition to diverse design considerations, uncertainties on the accreditation process, how not just existing financial institutions, but provincial or federal OSFI financial institutions, but also provincial institutions would participate, the need for potential legislative change across every province, potential uncertain impact on commercial banks, the questions about whether or not we needed ex-ante privacy reform, no clear parameters of a sandbox, but if zeroing in the middle on the purple here, having a top-down centralized structure that contemplates not just federally regulated banks sharing their data, but fintech firms accessing that data, banks accessing the data of other banks, and provincial financial institutions being able to participate in the ecosystem. There's a complex supervisory and regulatory scaffolding that is unfolded from this, which is really what's driving the delays, from technology standardization, gateway access, understanding accreditation processes, Governance, I'm going to come back to governance because that's proving to be a particularly difficult one to settle. Consumer risk disclosures, liability assignments and enforcement, cybersecurity measures, budget allocations and funding. The purpose-built governance entity is something that has to operate Canada-wide. It has to be able to handle disputes, has to be able to respond to security breaches and data incidents, has to be able to assign responsibility. This has proven to be a very tricky element of this, which is really what's excuse me, driving some of these delays. In addition, when you're considering a very complex top-down structure and regulatory architecture, you have to be mindful that there's other parallel government initiatives that can also create intersecting complexity on this. For example, the implementation of a digital charter, which has been talked about in Canada, privacy law amendments, desires for digital identity, the fact that retail payments modernization is happening right now, and other industry initiatives as well. It's added to the complexification of the process, and it's made the implementation of a national framework for open banking slow to materialize. Okay, well, that takes us to Alberta. If we're in a scenario where we know that there's complexities on the federal side, but we accept that there is consumer benefit to having some type of safer data access and data deployment, could Alberta do anything alone? That's an interesting question that hasn't been investigated until my paper. What I did is I took the existing international implementation approaches and I sought to apply them subnationally within the confines of the province's authority under the Constitution. Let's just kind of scan what we could do, and then I'll get into what I prescribe. So on the one hand, there's a market-driven framework. You see this in the US and in Singapore, where the government takes kind of a facilitative role to lower frictions to industry partnerships. So within a market-driven framework, you want an environment where there's basically low friction testing. So industry, and interestingly enough, the market-driven framework is kind of what's happening in Canada right now, given the complexities of the federal top-down approach. So there can be a variety of data use case scenarios. You're effectively in a market scenario, in a market-driven framework. The government is wanting to remove as many reasons as possible for a financial services participant not to locate their technical expertise in Alberta. Okay? I'm going to combine the black and the green in a second here, because those are important. A market-driven framework is not the only approach. If we look at, for example, a prescriptive approach, so that would be the red. This is something like the UK, for example, direction to provincial regulated financial institutions that they have to deploy their financial information. So a top-down mandate within the confines of the province. That could be applied in Alberta. Japan has a voluntary institutional opt-in, which could be combined in with a market-driven framework. But let's take the pure prescriptive approach. If we were to do that in Alberta, we would likely require a complex regulatory scaffolding. And it's, in my opinion, I get into this in detail in the paper, I believe it would create similar delays and frictions as the federal approach. And more importantly, it's not certain that a prescriptive approach would even justify the extra frictions, given the fact that it may not produce a critical mass of data to justify increasing supervisory costs. So we could have a framework where we actually increase regulation and an attempt to create this efficient open data sharing regime. If we don't do it right, we could actually increase regulatory burden, deter innovation, stifle market entry. Okay, well, what about Australia? Australia came about it from a different way. Instead of a top-down prescriptive approach, they came with a bottom-up endowment approach for consumers to control their data via consumer data right, which is established by new legislation. I believe this is a viable measure to consider in the long run. The Australia government considers this as a core infrastructure to support a data-driven economy and property rights of provincial jurisdiction pursuant to Section 9213 of the Constitution Act. Well, what about this green? Controlled experimentation through a provincial sandbox. Well, Alberta is unique. We have a unique legislative mechanism that I strongly support called the Financial Innovation Act, which allows for a sandbox. What is a sandbox? Well, sandbox structures have been used in fintech for a long time. They were pioneered by the FCA, the Financial Conduct Authority in the UK, around 2014 or 2015. The idea behind a sandbox is that a disruptor, a fintech or an innovative company, or even a legacy financial institution can seek time-sensitive regulatory relief under supervisory parameters to test out something. So you basically have the legacy rules and you get relief from some rules, and it could be across a variety of statutory frameworks. You get time-sensitive relief to certain statutory provisions under bespoke terms and conditions to allow for real-time testing to see if there's consumer utility in these types of products and services. We've had a sandbox in securities jurisdiction since 2016. So the CSA, which is the umbrella organization that harmonizes policy across the Provincial Securities Commission, has established in 2016 a sandbox which allows for firms who are operating within the securities jurisdiction to gain relief through the passport system across all Canadian jurisdictions. Well, Alberta in 2022 established a controlled experimentation mechanism called the Financial Innovation Act, which I believe can be utilized for data portability use cases, intersecting with a market-driven framework with an eye to provincial consumer data right in the future. I don't think a mandatory prescriptive approach is smart for Alberta for a variety of reasons, which I identify in my paper. Well, how would we do this? Okay, like what are the prescriptive elements of it? And then my final slide is on thinking to the future with this consumer data right. Well, ideally, the province uses existing initiatives. We don't want to increase regulatory burden, nor do we want to expand policy resources, which are scarce, or require immediate legislative action. The province can take an accommodative active advisory role to reduce frictions and barriers to entry for data portability use cases and the development of open finance entrepreneurship. Now, you notice I specifically didn't use the word open banking. The legislative scope of the Financial Innovation Act includes financial products and services. So it by statutory definition expands beyond just banking data. So investment dealer, insurance, crypto assets, there's a whole host of data sharing, data portability use case mechanisms that could be tested through the sandbox. By doing that, we can start to develop regulatory expertise in consumer data portability use cases beyond just banking, into finance, even energy, utilities, consumer retail data, government house data, and self-sovereign digital identity. We don't require, because of the Financial Innovation Act, the ex-ante crystallization of a complex top-down regime or the expenditure of significant policy resources, legislative action, or a complex subnational regulatory architecture or governance body. Well, what do we need? Well, we need entrepreneurs who are willing to come forward with data portability use cases. It would be helpful to engage in educational efforts on the benefits, use cases, processes, accessibility, and functionality of the Financial Innovation Act. It's interesting that I have some of my students who are aware of it, but a lot aren't when they come into new. So providing more transparency that we have a mechanism here in Alberta to test new financial products and services under controlled and consumer protected frameworks. Through the testing, we can be gathering real-time data. That real-time data can help to make recommended, not prescribed, but recommended design standards and guidance. In conjunction with the Financial Innovation Act, we can actually utilize, I believe we can utilize the concierge service as a gateway for market-driven open finance use cases and industry partnerships. with experimentation through the FIA sandbox. And I believe that it would be worthwhile, and I provide support for this in the paper, to investigate in the future the creation of legislation of provincial consumer data right. This would be a catalyst for data portability use cases beyond open banking to a larger open data and data economy paradigm, including energy, investments, insurance, utilities, telecommunications, consumer retail, and self-sovereign digital identity, because the conceptual products and services that you see and that are identified in financial applications could be extended outside of finance to other mechanisms as well. There's some complexities. This is the last slide that I have. There's some complexities to this. We can learn a lot from the Australian approach, and as they continue to put out information on this, there's learnings that can be had. Interestingly, the federal approach doesn't contemplate a consumer data right. Now, property and civil rights is provincial jurisdiction, so that would make sense. The federal approach looks more like a much more complex version of the UK in terms of the mechanisms involved in it. There's a lot of interesting benefits to be explored around the Australian approach. Because of our constitution, the property rights is provincial jurisdiction. One of the first considerations on this is actually right here in the middle here. What would a consumer data right be? Would it be a sui generis property right? Or would it be some type of mobility right and control rights? That is something that needs to be investigated in more detail. Another thing to investigate on this is how do we ensure that we do have consumer redress on this if data is used inappropriately. Another challenge with the consumer data right is decoupling consumers' data from derived data, which is derived, that financial institutions, other institutions derive based on the housing and the data that they have. There is some questions about assigning liability and third-party risk assessment will probably require legislative action to this. And also we have to be mindful of privacy reform and ensuring that we have equivalence both federally and internationally with this. So this is not a simple step here, but it seems to be, and I would argue, a growing consensus, at least academically in the literature, that Australia is going about this in a good way. If we're wanting to unlock the full potential of an open data economy, then consumers need to be endowed with rights bottom up rather than just pure top down. And the pure top down, while it has the potential for consumer benefit, it brings with it significant complexities, which we are seeing in the federal approach. So with that, there's more details on all of these components in my paper, and I'm happy to open it up for questions until noon, till we're done.
Thank you very much, Ryan. As Ryan just mentioned, the link to the full paper has been sent to everybody. It's embedded in the invitation you received to the webinar. If you don't have that, just email me and I will happily send you that link, or you just can Google it by name. So now's the time for questions. If you want to start typing any questions you have in the Q&A spot. Ryan, one of the questions that's up, you've answered on the benefits. So I'll go to the next question from Andrew Gonzalez. How can open banking protect consumers from getting scams and frauds to access data?
Yeah, so this is where the access elements are normally defined, and so whether it's a consumer data right or a top-down regime, high level we think, okay, well, who wants this data and why? So ideally, and how we unlock the data is contingent on the consumer data right or the top-down direction. So either way, we have an entity, a third party, or another financial. So maybe the third party is a fintech firm, so a financial technology firm, or maybe the third party is some existing financial institution which operates within the regulatory confines of existing regime. Some entity wants our data. Why do they want our data? Well, presumably, we can go back. They want our data because they're going to provide one of these. They're going to provide something to us, and we want that something. Either they can give us, a better credit terms than a major bank can, because if they unlock the data, they can do a credit risk assessment on transactional data. It might be the origination of new debt. It might be some type of application that we want to use, like an aggregation service. So they're trying to get our data. Okay. Well, in screen scraping right now, we can just let them in, right? So we expose ourselves to scams, we expose ourselves to cyber vulnerability, and we also expose ourselves to second order hacking, and that the screen scraping firm is basically sitting on everyone's password. So that's a point of vulnerability that we want to avoid, and the Senate report gets into a lot of that. Your question is, well, how do we ensure that we have a mechanism where the third party itself is liable for the unlawful use of the data, or sharing the data, or exposing us to fraud and scams? Both the consumer data right approach and the top-down approach is contemplating that. So in the top-down approach, you can see when I get in the purple here, complex supervisor scaffolding and governance framework to deal with, respond to data breaches, assign liability and enforcement. These are questions which are proving to be difficult to exactly figure out federally. How it's been done in other regimes like the UK and Australia is there's a process that firms have to, almost like a licensing process, that they have to go through to be able to access that data, period. There's no access to the API unless they go through that ex-ante licensing process, if you will. Okay. And the accessing point doesn't give them access to the account login information. It just gives them access to the data that you tell them they have access to. In that assessment ex-ante process, and there's ex-post continuing obligations on these firms being accredited, they're subject to a variety of controls and potential liability around misuse of data. So it's not going to be, so what open banking contemplates, whether it's the consumer data right approach or the top-down prescriptive approach, is that in order to even access the data, you have to go through some type of a regulated process to be able to be in a position to even receive the data. Well, and through that regulated process, you're subject to liability, you're subject to controls. Okay, well, if I said, well, if we're going to look at it from like a market-driven approach with a controlled sandbox, well, how would that work in Alberta? Well, what you would have is you would have a fintech firm who says, I want to build one of these things. We want to beta test it in Alberta, and we want to see how it works. The mechanism of the Financial Innovation Act would set terms and conditions on the firms accessing that data to ensure consumer protection is built in. But it's not, there's been some sentiment that I've heard, which I think is not the case, which is, the sandbox facilitates a mechanism where we just get rid of the laws. That's not true at all. That's not true at all. It allows for regulatory to a contextual and bespoke framework that can be built around innovative applications, because innovative applications don't always fit well within legacy frameworks. I write extensively about this in crypto, for example, and DeFi. It's not always clear that a new firm who wants to do something in a new way will easily fit into the existing regulatory framework. So having a mechanism where the provincial government can look at this and say, okay, whose data is being accessed? What are the risks? What terms and conditions do we need to place on this arrangement to ensure that risks are mitigated to protect against scams? That's what ends up happening here. With a top-down approach or the consumer data right approach, the mitigants against the scams are built into the regulatory substructure.
Thanks, Ryan. Next question from Carrie Lockend. I've been considering the prospects of liquid democracy, blockchain, and the critical importance of self-sovereign digital ID security. Some assurances that the government can't pull what they did to supporters of an event in 2022, basically trust in the system. Your thoughts on open banking linked to liquid democracy concepts?
Yeah, that's a really interesting point, and it's a point that I write on a different subject, but the similar kind of concerns. It has to do with the central bank digital currencies, so CBDCs. So, the idea with CBDCs basically is, well, if we have this, blockchain technology, a distributed ledger mechanism, which can provide for instant settlement and global remittances and disintermediate legacy financial institutions in the flow of money. But the original implementation of these things like Bitcoin have shown too volatile to really be useful as a medium of exchange and a store of value. So you've seen the emergence of these stable coins, which provide a stable value across blockchain. And then you see now, in contrast to stable coins, the emergence of these CBDCs, which are central bank digital currencies that basically say, well, we'll use the same blockchain technology on a permissioned infrastructure, and we'll allow for that same interoperability and global settlements and remittance and instant settlement global remittance. But this is your point. There's been a lot of people say, yeah, but now that's censorship now, and that's nudges can be built in, and negative interest rates can be applied, and we've got now a dynamic where maybe consumers don't want their financial data on the rails that the government sees and controls. And so what I think I understand your question to be is, how do we ensure that SSDI models don't lead into a big brother type framework, right? Where based on your political preferences, you could be, denied certain fundamental rights by a click of a button somewhere with a bureaucrat operating somewhere. And that's a reasonable point. The answer comes down to design models. And so there is a lot of literature that's being produced, and I would say we're very early in the stage of SSDI, particularly distributed ledger-based systems SSDI. But like CBDCs, the analogy is design models around those to ensure that it doesn't lead into a kind of a big brother dystopian type scenario where within a push of a button, our rights are unilaterally taken from us. Good question.
Ryan, a final question. This one's for me. In Canada, we love our oligopoly tier one banking system.
Sure.
With the big five. Do you get a sense that the big five view open banking as a threat? You've talked about lower costs of transition. Do they view it as a threat to keeping all of their clients engaged in all of their service offerings, particularly on the investment side? I'm one of those. I still bank at the same bank that was the only bank in my small town, 40 years later. And I also have mutual funds. Do they view this as a risk of, lower cost, easier transportability, and the type of apps that bring everything together under one roof? Would they lose some of their power over their client base?
That's really interesting. So I would say to that, based on what I've researched and what I've seen, and I've done a lot of, been a lot of conferences and different things, I would say it's a combination of ambivalence plus inevitability. That there's definitely some cons, there's potentially some pros, but it may be inevitable that we're heading this direction because of the consumer welfare that exists. What's interesting about banks on open banking And one of, we actually had Colin Deacon come to who's a senator who does a lot of work in, technology and entrepreneurship, and has written and spoken quite a bit about open banking. I have him come speak to my students, and one of my students literally asked him that question. He said, how is open banking not just going to lead to, the big banks, the big OSFI banks sharing and accessing their own data? Like, there's a lot of other barriers to entry outside of just access to data. Like, for example, access to payment rails and access to deposit insurance and access to other elements, which makes it hard to penetrate banking, period. And you look at something like even crypto ecosystem, something that's supposed to have an ethos of disintermediation has led to a whole bunch of intermediation and increasingly concentrated intermediation too. So, I think that maybe if I come back to even the slide, what's on the screen right now is maybe that's where Alberta has a bit of an advantage right now, and that we could start utilizing and showing some bottom-up type processes. Now, what is the inevitability of this? Does this lead to just the banks acquiring the fintech firms? Maybe, but it does provide residual benefit to us as an entrepreneurial hotbed, and as a area where we've actively tried to lower the frictions as much as possible for use case development, and it increases our regulatory expertise in the area. So I think it remains to be seen what ultimately will come of it. What I do think can't be ignored, and you go back to your point about, I bank with the same, banking partners I've had for 40 years. Well, do you also realize that you pay some of the highest fees in the world too? And have some of the least favorable financial products as well. So I think the inevitability around this will be some consumer welfare. And even if it ends up with, a slightly expanded oligopoly in banking, I believe, and the empirical evidence seems to be pretty strong on this, that there will be consumer welfare benefits to it.
Thanks, Ryan. We are running to the end of our time. I'll turn it over to Jack to end for the day.
Thank you very much, Ryan, for really stimulating paper and a stimulating discussion right now. I have to admit, just from a general point of view, I was struck by two things. First, actually, how Europe and Australia have moved ahead, actually, with regulatory regimes, and particularly your comments about the bottom-up approach being used in Australia. Is, I think, something very important for us to keep in mind. And in fact, when you think of that, there's a very significant part of the Western world now has adopted open banking, and the United States is slow. I'm sure there's some good reasons, although I think one of the problems in the U.S. is the split of regulatory authorities at the federal level impede progress there. And that's been true in a lot of things in the United States. But in Canada, that's the second point, is you're just struck about how long these things are taking in Canada to be done.
That's right.
And this is another regulatory example of our very slow regulatory regime in Canada for getting permitting done, moving ahead with new ideas. And there's huge benefits associated with that from what you outlined for consumers, including lower fees and a wider variety of products being available to them. So I really hope Alberta thinks very, very innovatively and tries to move ahead, I think, with this potential regime. And luckily, there's someone home-based who can provide a lot of very good advice to Alberta authorities on how to put this together. So congratulations on truly an outstanding paper and session. And thank you so much for giving us your ideas today. And I'm sure if anyone wants to get in touch with Ryan, I'm sure you can find him very quickly at the University of Calgary Law School. Absolutely. So thanks very much.